Tesla
Josh.
gamma squeeze. Right now we see Tesla absolutely taking off. I'll show you what trades I'm doing to trade around Tesla with all these options volatility picking up. Let's roll right into it. So basically, the reason why Tesla is absolutely going to the moon right now, it's like doubled in the past month or two, is because so many retail buyers are piling up short-dated call options, driving the price up. We saw that. Like, why? Why, if someone buys a call option, is that going to bring the price up? It's only going to drive it up when a ton of people are buying these calls. If you look at a chart of the call buying of Tesla, it looks like Shiba Inu right now. It has gone absolutely straight. And these short-dated call options are the most risky of trades. People are going out 1 to 2 weeks, dumping money into these call options. But what actually happens? So someone buys a call option. There's another person on the other side of the trade that sells the call. And when the stock goes up, and they sell that call, they are actually short 100 shares of stock. And if you're short 100 shares of stock and the stock keeps on going up, then you have to rebuy that stock, which drives the price of the stock up. The stock goes up. The people who sold the calls, they're short 100 shares. Now they have to rebuy. And it's just a feedback loop of gamma pushing the stock up. And that's what we're seeing right now in Tesla. So what am I doing? I am buying some bear put spreads. Not actually yet. I plan on doing this. I plan on doing some of this tomorrow over the next few days. Once I kind of think that peak call buying has happened, I think we could see a run up tomorrow, probably towards midday. I plan on buying some bear put spreads. But let's share your screen, Justin. Or do you have anything to add?
No. Basically, I think the takeaway here is that depending upon how one views Tesla as performing, and if one, and perhaps Josh, you'll get to this in just a second, but if one also kind of wanted to protect the portfolio to the downside, this seems like a useful trade that kind of kills two birds with one stone. Let me get my screen here queued up.
Yeah. So right now, Tesla has because of this, Tesla has like a $1.3 trillion market cap, which is just absolutely insane for a company that doesn't even make profits. But here's what I'm doing is I really like the asymmetry here. So I'm buying some bear put spread, saying, all right, well, just thinking it realistically, I am over. If you've been watching the channel, you know that I have a lot of my money tied up in a certain stock, Zim, that it's performing very well right now, but I've not yet taken profit. So I'm still a little over leveraged along the market, and I want that downside protection. Let's say the Fed's coming out and they're going to announce a taper that could dramatically change how my portfolio looks. So I want some downside protection. And I think Tesla would be the perfect stock that if we see a taper call, they would be extremely negatively impacted by interest rates rising, as they are a company who relies on extremely short-term debt being at all-time record lows. So let's look at the option chain. So I'm going out going out to March 18th, 2022, and I'm getting a bear put spread, buying the $800 strike and selling the 150 put. I mean 750 put, betting that if the stock is below $800 and max, then I'll make money. And if its max profit is below 750, then I'll make 7 times my money. So this is a 7-to-1 risk to reward, and going out 130 days, which I really kind of like the asymmetry. So it's going to cost you $650. Max gain is 4,300. I'm not really putting on this trade to make a shitload of money. This is mainly for protection for my overlong, because if my thesis plays out on Zim, I'm going to make a lot of money. So I just want protection in case that thesis doesn't play out. And if I get 1 or 2 calls on this, I have a lot of protection where I'm really not going to suffer too much downside. And it's just what I'm doing.
And Josh, so let me jump in just for a second and kind of say back what you just said. So for $660 and change, what you're really doing is you're placing a bet that Tesla, on or before, March 18th of next year, will fall to at least $790 or $793, or if not lower. And if that's the case, if it goes to 793 and exactly 793, well, technically you've made back your money, and anything below 793 is just pure gravy that you get. That continues all the way down to Tesla being at 750, at which point your gains are capped. So really the sweet spot for you is 750, or the first sweet spot would be recovering.
If it's anything below 750, then I'll make a max gain.
Yeah, but like Tesla going to be beneath 750, whether it's 750 or whether it's $2, it's still the same gain for you.
Yeah, and I enjoy putting this bet on a company that I'm fundamentally bearish on. I think Tesla is an incredible short. I would not short it, and I think people are dumb who try and short it. But we have seen Tesla go parabolic. The asymmetry on the downside is pretty high, and I like the fact that my portfolio would suffer from a downturn in the markets, and I think Tesla would probably suffer a lot more. So if I could capture that gain, it's basically going long vol. And if the market turns around and Tesla doesn't, then I'm fucked. But I do not see that coming. Why don't you explain the risks that you see in shorting Tesla or buying some puts on Tesla?
Right. So I guess the thing with Tesla that, and I know this is maybe the pot calling the kettle black, considering my irrational exuberance when it comes to a certain other meme stock that floats around out there who remain nameless for this video. But the thing with Tesla that I note is that Tesla's not having any problems selling cars, be it with financing or be it not. If that bill goes through, their cars are going to be even cheaper. I think there was a $10,000 tax credit that was shoehorned into whatever stimulus abomination they're trying to ram through Congress right now. So there's that. And I guess really I come from the standpoint of, I don't mean to say, as you, or what I seem to be accurate, that, Tesla, if they squeak out profit, it's only the barest of profit on the slimmest of margins, so be it. But I do think it's important to consider that Tesla has, to be charitable, somewhat of a cult-like following with it. I placed an order myself for a Tesla a few weeks ago, and the earliest date that Tesla quoted me for delivery was August of next year. This doesn't strike me as a company that's having problems selling cars. Even when I drive my current Tesla around, you get stares and people come up and ask.
Well, I think it is dumb for people to argue that right now Tesla's stock price accurately reflects their forward projected earnings. And yes, I agree that they're selling the cars that they're making, but it is nowhere near the amount that they would need to justify a $1.3 trillion market cap. And I'm not saying Tesla's a good or bad company. I don't care. I'm looking at it from fundamentals are not going to drive the short-term prices. Right now, Tesla is exploding off of the gamma squeeze. That gamma squeeze was probably a result of Hertz saying that they're going to buy a bunch of Teslas, but nonetheless, it is the option market driving Tesla right now. Things that go parabolic often come parabolic to the downside. And that's all I'm saying. We see Tesla gapping up right now. When stocks are gapping up towards the end, Jim Rogers say that is when they're primed for a short. I'm not shorting. I'm buying puts, and I'll see what happens. And this is not something. This is just kind of play around money.
Right. So again, I wouldn't necessarily disagree with that, but what I would say is this: is that I just finished listening to an audiobook. I forgot who wrote it, but it was the postmortem of what happened at Long-Term Capital Management. And the net of it is you had very smart people who were excellent at arbitrage, and they had all the models, all the data, et cetera. And the answer is, well, they were correct, but only technically correct, because that assumed that the market was being rational. My point is that irrationality in the market will override rationality. And I think if you look at Tesla, there's a lot of irrationality that surrounds it. Now, perhaps one day the irrationality will fade and, the luster will, melt off Tesla, at which point I would say things might be a bit more normal or a little less weird. But until it happens, it hasn't. And so that's the thing that that's where my hesitation comes from in that regard, in the sense that the cult-like following of Tesla is going to completely ignore the fundamentals of the market. And if there's enough of them, if there's enough of them to ignore the fundamentals of the market, and for as long as they decide to ignore the fundamentals, the irrational pricing will override the otherwise rational pricing. Now, so how long that lasts, no idea.
I think that we're getting close to the point where there'll be no more buyers. And I don't think more cult following is going to continue to surround Tesla. I would say everyone who is a Tesla cult, they're probably already in Tesla as hard as they can be. And once everyone's already in, it's hard to get more buyers. So there's only one way for the stock to go. And I don't even care if the stock goes down. This is just something that is going to protect me in case of a downturn. And I think a potential thesis is my play with Zim plays out, because it's already done extremely well. I will probably take some profits going into next week, and then I'm in the clear. I really just, in case we see a flash crash or something, I just kind of want some of this protection. And it's I'm not even saying I would short Tesla, and I would like to put on a bigger put size at some point, but it's just, Justin's right. There's too much euphoria, and when that happens, it can last a lot longer than people expect.
Yeah, and again, I have no idea how to handicap that. Now, that being said, if I found like another stock besides Tesla, like I would be much more back. Here's like this, Josh. I like everything you said from me speaking personally, except the fact that it's Tesla. With the sole, and the reason I say that is that I sense that the emotion around Tesla is strong, and I don't think that it's going to go anywhere. Now, will that be the same in March of 2022? Who knows? Last thing I'll leave you with is this. If banks right now are awash with customer deposits, that means that one would assume customers, the average Joe and Jane, have resources or liquidity that's just sitting in a bank. If all of a sudden you have fears about inflation, or if they're worried about whatever odd reason, or if they just want to FOMO in or whatnot, my point is that what would be the analogy? Like the gun is primed, even though the trigger's not yet pulled, in the sense that, retail has the capacity to FOMO in if they want to FOMO into that. In other words, retail's not tapped out. That's my point in general.